What's good? It's your boy Hollywood Chuck, and it's another segment, another top podcast with BWE Group, Meal to God. Today we came to talk to y'all about credit and the ins and outs of it, how it can advance your life, how it can keep you in the same place if it ain't together. And what's good, Meal to God?
What's up? What's up?
We over here.
Oh shit! I'm looking at the
yeah, we over there.
computer.
You looking at the monitor. Let me turn that little around right there. Yeah, so you want to talk about credit? You want to talk about the ins and outs of credit, how it can advance your life, how it can help you, build generational wealth, things like that.
Yeah. Well, when we had the conversation, I remember we was talking about the CPN numbers and trade lines and everything, and we had spoke about how people is ignorant to how to use them, and like people be thinking it's illegal, all that. Conversation and stuff. So I had wanted to, I thought it'd be a good idea to do a show to like educate people on that, because we were saying there's a lot of benefits that people in our community, that there's a lot of benefits to having credit and being able to leverage it and use it properly. Right. That people in our community don't know, and if they knew these things, that maybe they could use it to benefit their situations, and then it could also help our community. Me, I'm always about like community building and black community and everything. So it would be a avenue that we could get capital, to help build our community up. So that's why I wanted to come on to try to clear a lot of things up, and then also school people to how to use those.
So what is a CPN?
What is a CPN? A CPN stands for credit privacy number. So that's what the name CPN actually stands for, credit privacy number. And it's a brand new, it's a new but or alternative number to a social security number. Mm-hmm. Now, what people don't understand about any number, right, and this is something that I really want to touch on, when you have a 9-digit number, which a social security number is a 9-digit number, right? Mm-hmm. So a lot of people that's in the business, that have businesses in the business world, they'll be familiar with the EIN number, right?
Yeah.
They'll be familiar
with that. That's a business social, basically.
A business social, right? And then everyone is familiar with the social security number, right?
For sure.
And then I'm about to school them to the CPN.
Unless you're living off the grid, you know what I'm saying?
Yeah, but if you was pretty much born in America, and you was born in the hospital, they're gonna give you a social. Even though you could get yourself a social, but that's a whole nother show. Mm-hmm. But basically, so what people need to know is, anytime you got a 9-digit number, that's an account number. So that's the first thing I want to clear up. A 9-digit number is an account number.
A 9-digit number is an account number.
Is an account number.
Period.
So,
to somewhere.
Yes, Social Security. That's all those numbers are account numbers.
Okay.
That's what I'm saying. It's the account is whatever you creating. So like if you got a Social Security number, most people don't know your Social Security number is just your financial account number. That's all it is.
They're supposed to give you up to $5 million, from what I heard.
That's another story.
From what I hear.
But having a Social Security number, if anybody, to the audience, if you just think about what you use your Social Security number for, it's always attached to an account. Mm-hmm. Always. That's the only reason you have it, is so that it can keep account.
Right.
Financially keep account of whatever accounts you have. Financially, right? EIN number, same thing. It's an account number. You get it from the IRS. Why do you get it from the IRS? Because it's a way to keep account of your business finance.
So let me get this straight. So the CPN and the SSI, Social Security number, the SSN, the CPN and the SSN is basically the same numbers, and both are created by the government.
No, well, no, they not. But that's what I was getting at.
Okay.
So what I was trying to explain is that anytime you have a 9-digit number, it's an account number.
For sure.
So that's why I want to get clear, so people understand. A 9-digit number, Social Security number, TIN number, EIN number, CPN number, is all account numbers.
Okay.
So I said that because a lot of people, it's a misconception that CPN numbers are illegal, because people don't understand what account numbers, what the numbers are for anyway. All those numbers, all they do is keep account
of you,
of you financially.
Okay.
Yeah. So if you got Social Security number, your Social Security number is basically a corporate account number. So you are a corporation, whether you know it or not.
Whether you like it or not, whether you know it or not, whether you want to hear it or not, because a lot of y'all don't want to want to hear it real.
That's the truth. So that take me back to the CPN number. So CPN number stand for credit privacy number.
For sure.
Right? A CPN number is basically a private Social Security number. It's an account number. Remember I said all non-digit numbers are account numbers. It's just a way to keep account privately.
Okay.
Because it stands for what? Credit privacy number. That's what CPN stands for.
Right.
So like all this taboo or CPNs are illegal. No, it's just a private number. Mm-hmm. People don't understand public and private. Social Security number is a public number.
Right.
That's given to you by the government. So remember you said it's given to you by the government?
Yeah.
That's given to you by the government.
The SSN is given to you by the government.
Yes. CPN number is given to you by a company that creates private numbers. That's why it's called credit privacy number.
So you got but what people want to know is, do the government respect that number?
Well, if it's tri-merged, it's not even about whether the government respect it or not,
or companies,
because companies respect it. Because the government, if you have a CPN number, the government ain't supposed to know about it because it's private.
Right.
See, there's a different that go back to public and private. You got a right you got public law and you got private law.
But if I'm using it to buy a car, then that's not private no more.
I'm gonna get to that. Okay. You got public law and you got private law, right? That's like a kind of a whole different subject, but I'm gonna touch on it a little bit. So, public law is criminal law, statutory law, civil. Those are public laws. Mm-hmm. Private law is contract law. Contract law is private. So anytime you're doing business through contracts, that's a private transaction. You got a right. You got a right to privacy. You got a right to privacy.
Right.
So a CPN number is a credit privacy number.
Okay.
So that's a way for somebody to have an account on the private side. So it's not something that you hide or something that's illegal. It's just your way of being private.
It's just your way of being private.
Right. So you don't want if you got a CPN number, you don't want the government to
But they say your Social Security number is supposed to be private.
It's not. The Social Security number is a voluntary number, to be honest with you. But that's going to take us in a whole nother. Okay. It's really voluntary.
You don't have to take it.
You don't have to take it. You don't have to use it. Mm-hmm. But if you're going to be public, you have to use it. Be public. But if you want to be private and you want to still do commerce, you can do commerce with the CPN number.
I did not know
credit
that.
Privacy number. So the answer your question, do the government respect it? The government ain't supposed to know about it. But do companies respect it? Yes, if it's done, if it's created properly, they'll respect it.
If you ain't burning nobody with it,
it's not even about that's another. That's when you get to criminal, being criminal or whatever. But well, I'm gonna touch on this. To be honest with you, if you go to the FBI website and you can even Google this FBI I might even do it while we're doing this. FBI on CPN numbers. A lot of people ask if CPN numbers are illegal. The FBI on their website, they actually have a section on their website about CPN numbers.
Oh, they do?
Yeah, and they say CPN numbers is 100% legal unless you use it to commit fraud. So, and commit fraud is what you just said. If you use it and burn it, if you don't.
If you're not paying your bills.
If you use it for, purposes of, because it's private number.
Because even when you use a Social Security number and you don't pay your bills, the government come after you.
The creditors will come
after you. And that's the same thing with CPN, right? The creditors going to come after you.
Yeah, but it could be, you could potentially catch a case if they could prove you used it for fraudulent purposes, which means if you get a CPN number and you create bills and then don't pay them and they could prove that you purposely didn't pay these bills, but you knew this was a private number, then they can come at you.
Then it's a crime.
Then that's a crime. And that's actually on the FBI's website. Like you could go to the FBI website and they actually have a section on the website about CPN numbers. So but the gist of it is a CPN number is basically a private credit number. It's a private Social Security number. So the reason why you would want to have a CPN number for privacy is if you don't want to. If you have accounts and you don't want to pay taxes to the government, like you was asking, do the government respect it? Well, you wouldn't want the government to know that you got a CPN number because you could actually have accounts in the CPN number, and and you could be making money. You could be doing business with those accounts.
Right.
If it's a Social Security number, Uncle Sam wants his tax money.
Yeah.
If it's a CPN number,
then they can track you still.
They can't ask you from what you mean.
I mean, like if it's a social, they gon' track you.
Yeah, they can track you. The government can always track a social because it's their number. They create it. When you got a private Social Security number, it's not in the government system. You don't want it to be in the government system. You don't want it to be respected by the government. It's private.
It's all about privacy.
It's all about privacy. It's your way to you could get credit accounts, buy cars. You can do everything pretty much with a CPN as you can do with a social. If it's properly tri-merged too, that's a whole nother thing.
And so, what's properly tri-merge?
Properly tri-merge.
Or did you want to touch on?
We can touch on that.
Okay, what's
for sure? I wanted to. Well, tri-merging just means you put it in the financial system. So, like, it reads, the creditors can see it.
All of the Experian, FICO, all them people.
They'll see the number. So that's how it get respected by companies or creditors, and whatever you're trying to do commercially. That's how the number gets respected by them because it's tri-merge. So, but tri-merge just basically means you put it in the system.
Yeah.
So you put it into the financial system, and then when someone go to get a apartment or a house, or they read the number, and they run a background check, the number come whatever profile that's attached to that number come up in the system.
So basically, it's a way to, kind of have a clean slate, maybe. If you want to be like,
definitely.
say, you know what I'm saying, with people that's having like 400 credit scores, stuff like that, they could come to you or any financial institution and get that CPN number, get them services.
For sure.
They can come to you and get them services.
Yeah.
And of course, it's not something that's going to be 700 credit score off top. It's a process with a CPN is too. It's not just you get a CPN and it's all good. Yeah,
well, anytime you dealing with credit, and we're gonna get to that, like dealing with the algorithm. That was what I was gonna talk about next, the algorithm of credit. Anytime you dealing with credit and you don't have a credit score, it's always a process. There's no way in the world to have a credit. A lot of people think that too. There's no way in the world to have a good credit score or a good. It ain't even so much about the score. That's another thing I'm going to talk about. There's no way to have a good credit profile when you starting from the beginning. So, like, if you never had credit, it could be a Social Security number, CPN, business credit, anything. Yeah, you're not going to have good credit. It's a process of building.
Right.
So that's when we're going to get into trade lines and the algorithm and all of that, too. Mm-hmm. So those are the other two things I wanted to touch on that people not really educated to when it comes to credit.
Right.
But that's a good segue to that. But so, basically, yeah, if you got a clear credit profile, or you never had credit, or you beginning to get credit, you always gonna have to work to build the credit on it. If that's
you're gonna have to work to build the credit.
Yeah.
And so you get the CPN. What's next? When I get a CPN, walk me through the steps. When I obtain a CPN, what do I need to do to be able to make it a benefit for me?
Okay, well that's gonna take.
Because I can have it, but
that's gonna take me into the algorithm of credit. So, if you got a CPN number or any credit number for that matter, whether it could be a social, a CPN, particularly socials and CPN, even business, even a EIN, but particularly social and CPN, you got to understand the algorithm of credit to know.
What's the algorithm of credit?
The credit out is 5 factors that determine a credit score. It's 5 factors, and this is what's very, very important. I really want people
listen
to
up, people. Listen up,
because this right here, I deal with a lot of customers, and this is the
he charged for this, man.
This is the most misunderstood part of credit that I hear in the people that I deal with. So most people, when they building a credit or when they dealing with credit, and I was just texting when we got in here, I was just texting a customer that I'm gonna do a consultation with tomorrow. They think that, or they so focused on a credit score. Mm-hmm. So you got a new CPN number, or if you got a social security number that you're trying to build up credit wise or whatever. Everybody's talking about the credit score. What's my score? What's my score? What's my score? If I could do this, what kind of score can I get? How can I get my score together?
Yeah.
That's not the most important part of a credit report. What people should focus on is the algorithm, and I'm about to explain it. Now, I have documents, and I actually got an ebook coming out, and this is my personal document, and I do this. I got consultations for $100. I got like 5 documents that I can give anybody that want to know how to get their credit popping. But this is actually part of my documents. And people could hit me up at 877-725-9016 if they want to learn more. But
what was the number?
877-725-9016. But I want to focus on the algorithm. So this is very important. Now, it's 5 factors that create the credit score, right? The whole credit profile is 5 factors. That's and the score is determined by a certain percentage in each one of those factors, and that's called the algorithm of credit. So you got the first factor of credit, right? The first factor is previous credit performance. Previous credit performance, and I'm reading this directly from my document, aka credit pay history.
So that's basically like over the years, how have you been?
How have you been? Like however long you had credit, what your pay history is like. Now that's 35% of your credit score. That's 35%.
That's 35%.
5%. Now if you
what's that called again?
Previous credit performance.
Previous credit performance, y'all. AKA that's 1.
Y'all, AKA credit pay history. Now if you got a new CPN number or whatever, right? You won't have any pay history. So that's 35% of your credit score. So you have to create a pay history.
You have to create traction.
You have to create that. Now, the second part of the algorithm, the second factor to deal with your credit report in the algorithm is 30%, and that's debt to credit ratio.
So the third one is debt to credit ratio.
And debt to credit ratio is basically how much credit you have versus how much credit you use.
Yeah, so you want to be using less than 70%.
You want to be using, if you can, well, I just say, depending on what somebody's trying to do with their credit, right? Mm-hmm. But to maximize your credit to its best potential, you want to be at 30 or 15%. That's what I got
of usage.
Of usage on every credit account that you have, and that's what I put in my document. The next credit factor, which is 15% of your credit score, is how long you had credit. How long you had credit.
So how long you gotta have you had credit history.
Yes, how long your credit history. So no, it's credit history, but how long your history is.
Yeah.
So that's 15% of your score, and that's basically how many years you've been using credit. Mm-hmm. That's basically that. The next factor is 15%. The next factor, and this is 15% of your score, is type of credit available, aka how many different credit accounts you have. Now this is the most misunderstood one right here. This is like real one that we got to spend a little time on.
So what are they asking? Who you dealing with?
That's why I said this is the iffy one. The majority of the people who deal with credit have no clue on how this one works. So what type of credit you have right now? What most people who dealing with credit don't understand is you got a FICO score, right? Now this is I got to break this one down a little bit. Now the banks, you have 2 scoring systems when you're dealing with the bank. I mean, when you're dealing with the credit system, you got 2 different scoring systems.
Okay.
Y'all got to follow me on this. You got a FICO score and you got a Vantage score, right? Now, FICO is the score that the banks use.
Okay.
Vantage is just basically like a score that's like with people when they get apps like Credit Sesame and Credit Karma, they use Vantage. Vantage uses a different score.
So FICO is the real deal.
Basically, and because Vantage is just like to teach you, that's basically just a score to help people learn about credit. Mm-hmm. Most people don't know that. Oh,
so when you sign up with, hold on, let me get this straight. So when you sign up with like Credit Karma, Credit Sesame, all of these different creditor companies, that's basically a teaching tool.
There's just a teaching tool.
It's showing you the breakdown of everything.
It's basically getting you familiar with credit. It's basically just getting you familiar with credit. Reason why I say that, because the banks use FICO. Now, the reason why that's important is because when you go to a bank, or anytime you asking for funding, any type of funding, it's always coming from a bank. No matter what, I don't care who name
it's coming from a financial institution.
Bank. Right.
Yeah.
They use the FICO scoring system. They don't use Vantage. So the other reason that's important, it's important to understand FICO, is because there's 5 different FICO scores. Most people don't know this. You got different FICO scores. So like if you, for the audience out there, anybody, if you download the FICO app, right, and you get the premium package, which is $39, you can actually look in there and see you have 5 different credit scores. You got a home lending score. You have a credit card score. You have a borrowing score. You have a loan score, and you have a regular FICO score. The reason why you get these different scores is whatever the action that you're trying to take credit wise, you got a different score for each one of those. For each one of them. Now that's gonna take me back to this 15%. The reason why.
Hold on, Mill. All right, go ahead.
The reason why this 15% is so important, type of credit available, and this is gonna take me to trade lines, because each account that you have on your credit report affects that algorithm different.
Right.
See, FICO, you got 5 different scores, right? Each one of those scores for different actions of credit. Now that means different accounts that you have on your credit is affecting that algorithm different. So, for example, credit cards have affect the algorithm. The FICO algorithm have more of an impact on the algorithm than loans. Why is that? Credit cards. Why is that? Because managing a credit card shows more responsibility than a loan. Why? Because a credit card is a monthly payment. You know what I'm saying? It's monthly payment history. So if the way the financial system look at the credit card, right? If someone has a credit card and they're able to manage this money, like if you got a credit card, let's say $15,000, right?
Yeah.
And if you got 3 credit cards with $15,000 a piece on them, and you're able to manage those credit cards properly, that shows more responsibility. So that affects the algorithm more.
That open it up for you.
It affects the algorithm more positive. It has more of a positive effect on the algorithm if you do it right.
When you go to sit down with like lenders and stuff like that.
Yes. Now, if you do it wrong, it got more of a negative effect on the algorithm. Loans affect the algorithm, have a smaller effect, positive and negative on the algorithm. Why? Because if I give you a loan, that's a one-time payment, right?
That's it.
That's one time. So it's easier to manage a loan because basically I gave you some money. You take the money, do whatever you do with the money. You still make monthly payments, but you don't have to manage it because you just got money one time.
Yeah.
Whereas a credit card is something that you have in your pocket.
And you have to pay on
every day.
Make sure you ain't spending all of it.
It shows you have to be more responsible with a credit card than with a loan.
Yeah.
Like it shows more responsibility because having access to money, having access to a credit card money is something that you have every day.
Right.
You see what I'm saying? So I have to be fiscally responsible to be able to manage this money.
Yeah.
So the financial system look at someone who manages a credit card like they give you more points for the hood people out there. You get more brownie points for that.
Yeah.
You understand? Whereas a loan, you don't get as much brownie points because you're not really managing anything.
So basically, the more you save throughout the month on that credit card cycle, they see you as being more of a responsible person with the finance.
Right. And so every different factor of credit, for the type of credit you have, factors into that 15%. So like the ones that like say you get an auto loan. You get an auto loan and you pay, if you pay it off or pay it monthly, that helps your credit score, but not as much as the credit card. You see what I'm saying?
Wow.
The auto loans don't affect it as much. Personal loans definitely don't affect it as much. Like all of these things help your credit. Anytime you have an account that you paying on, it's always good. As long as you paying it on time and you keep the ratios cool, they all help. But credit cards affect your credit
the most,
a lot more than loans and anything else.
That's the most. The credit that affects your profile the most.
The most, yes. And that's a part of that 15%. So just getting back to this, types of credit available is 15% of your score. So that's going to take me to trade lines. and I'm going somewhere with this. It's a method to my madness. But types of credit available is 15% of your credit score. That's the fourth factor of the algorithm for the public out there. Now, the last part of the algorithm is pursuit of credit, aka inquiries. So that's 5% of your credit score. So how much you pursue credit could make your score go down. Well, really, it's the negative. It's a 100%.
Anytime you do an inquiry, for what I'm hearing, is negative.
It's negative, always negative. Because the reason why inquiries now it's only 5%, so it don't have that big of.
But if you constantly get inquiries from different,
it builds up. But to be honest, inquiries don't make your credit go down that much, even if you get a lot of them. But what happens is the more inquiries you get, it make lenders more skeptical.
They're like, why he moving around? Why he putting this social on everything? Why he doing,
Yep. So you could have an excellent credit score and have 5 inquiries in a month and get denied. You know what I'm saying, for credit, just because you got so many inquiries. So you usually don't want to do more than 3 inquiries in a 3-month time period. The whole financial system go off of quarters. So every 3 months is a quarter when you're dealing with economics. Okay. So everything going. That's another lesson out there. Everything going 3-month quarters. So in 3-month time period, you don't want more than 3 inquiries.
Right.
So you really don't want to 1 or 2. You really don't want to know more than 2 for real.
You really don't want to know more than 1.
Yeah, 3 is like that. That'll get you denied. 3 inquiries within a 3-month period. It gets you denied, even with an excellent credit score. But that's 5% of your credit score.
What's the fall off of that? Like, so say I did 4 inquiries every 3 months for 12 months, and how does it like fall off? Like, do I gotta wait a whole nother year before it ain't really it really's not affecting my profile, or like?
Well, inquiries supposed to stay on your credit 2 years.
Dang, that's a long time.
But if you know me,
right? If you know
and I can get them removed. I can get them removed. I know how to get them removed. I know how to get inquiries removed in 72 hours. Real talk.
He left the number. So
I can
make sure
a phone call. I can make a phone call to the credit bureaus in 72 hours. Well, on Experian, it'd be gone in 72 hours. The TransUnion, Equifax, it might take 30 days. Most of the time, it's faster. But
this true. This is true. That happened with my credit. Yeah. He did them with my credit.
Yeah. So you had to call somebody like me, 877-725-9016, and those inquiries would be gone. But
Black Wall Street Empire.com, right?
Yeah. Well, I got a credit website. Is it
different from that?
Yeah, different from that. It don't even got a name. It's just like a link. But if people call me, they can get that link.
But they can also message you on BlackWallStreetEmpire.com about that.
Yeah, they can message me on BlackWallStreetEmpire.com. But the gist of it is those 5 factors right there determine your credit score. Now, the reason why it's important to understand those 5 factors because what I just explained, each one of them factors all play into what the underwriters is looking at when they're looking at your credit report. So you actually can have an 800 credit score and not have a good profile.
Right. Because you got a lot of inquiries. Your debt to credit ratio low, even though you paying your credit on time. Yeah. But your credit card $15,000, but you didn't use 14,000 of it.
Not that, because you wouldn't have an 800 credit score if you did that. But what could make you have a great credit score and a bad profile is if you didn't have any history. Because 15% of your score is history, right? Right. So if you start credit tomorrow, if you don't have any credit, right, and if you don't have any credit, and tomorrow you apply for a credit card, you'll probably get approved for like a $300 credit card from Capital One or something, right? Yeah. And you keep it for a couple of months, you make payments or whatever, you will probably have like a 750, 800 credit score. Right. But when you go to a bank and you say, I got an 800 credit score, I want a $100,000 loan, they're going to look at your credit profile and say, well, you only got 3 months of credit history. Yeah, we can't give you that. And you only got 1 account.
What would it take for something like, what type of profile would get you that type of money?
$100,000?
Yeah, what type of profile could get you that type of money? Like, 5 years of credit history, good debt to credit ratio, low inquiries. This is some things that can get you that type of money.
Yeah.